For years, Tesla was the face of electric cars in Europe. Cool, innovative, and seemingly unstoppable, the brand became synonymous with cutting-edge technology and a bold vision for the future of transportation. European drivers flocked to Tesla showrooms, eager to be part of the electric revolution. The Model 3 and Model Y became common sights, lining city streets and highways, their sleek designs turning heads and setting new standards for what an electric car could be. And the Berlin Gigafactory signaled Tesla's intent to dominate, promising faster deliveries and a stronger foothold in the heart of Europe. But the landscape has changed. Legacy automakers, once slow to adapt, have now fully embraced electrification, rolling out their own impressive EVs, and new Chinese brands have flooded the market with fresh, affordable EVs, offering more choices than ever before to European consumers. Tesla's first-mover advantage is gone, as rivals catch up in technology, range, and price. The once clear gap between Tesla and its competitors is rapidly closing. Now, competition is fiercer than ever. European roads are filled with electric cars from a growing list of brands, each vying for attention and market share. Instead of asking when Tesla will conquer Europe, the question is whether it can even hold its ground. Sales are falling, market share is shrinking, and the brand's aura of invincibility is fading. Tesla is no longer the only name in electric mobility. Shoppers now compare dozens of models, weighing features, price, and brand reputation. The European EV market is writing a new chapter, one where Tesla is just one player among many, rather than the main character. The era of Tesla's unchallenged supremacy in Europe is ending, as new contenders rise and the market becomes more dynamic and unpredictable. The battle for the future of electric cars is wide open, and Europe is now the stage for a fierce contest that will shape the next generation of mobility. The numbers tell the story of Tesla's decline in Europe. In October 2025, Tesla registered just under 7,000 new cars, a 48% drop from the previous year. Its market share plummeted from 1.3% to 0.6% in just 12 months. Even the Model Y, once Europe's bestseller, saw sales fall by 41%. Year to date, Tesla's sales are down 18% while the overall European car market grew by nearly 5%. The problem isn't that Europeans have stopped buying cars, they're just buying fewer Teslas. Meanwhile, competitors are gaining ground, and Tesla's momentum has reversed. The numbers are clear. Tesla is losing its grip on a market it once defined. In a growing market, Tesla is shrinking. The company that set the pace is now struggling to keep up. The data doesn't lie. Tesla is stumbling. As Tesla falters, BYD has surged ahead, selling over 17,000 vehicles in Europe in October 2025, a 200% increase. BYD's market share now doubles Tesla's, and it's not alone. European giants like Volkswagen and BMW have launched compelling EVs, leveraging decades of trust and local networks. Chinese brands like MG are winning buyers with affordable, feature-rich models. The market is now crowded with choices, from luxury sedans to budget hatchbacks. Tesla's once unique appeal has faded. It's just one brand among many. Consumers have more options than ever, and loyalty is up for grabs. The first-mover advantage is gone. Tesla is fighting in a crowded arena. The EV market has matured, and competition is fierce. Tesla is no longer the default choice. The game has changed, and Tesla must adapt or fall further behind. Tesla's decline isn't just about competition, it's about missed opportunities and a failure to adapt quickly to a rapidly changing market. Once seen as the undisputed leader in electric vehicles, Tesla now finds itself struggling to keep pace with both established automakers and ambitious newcomers. The company's early advantage is slipping away, and the reasons go deeper than just new rivals entering the scene. Tesla relies heavily on an aging lineup, with only minor updates to the Model 3 and Model Y. While these cars were once groundbreaking, they now feel stagnant, lacking the excitement and innovation that once defined the brand. The absence of new models or significant redesigns has left many potential buyers underwhelmed. Meanwhile, rivals are flooding the market with a wider range of vehicles, from compact city cars to spacious family SUVs, and even luxury EVs. This diversity appeals to a broader spectrum of buyers, making Tesla's limited selection seem increasingly out of touch with consumer demands. Tesla's slow refresh cycle makes its cars look dated next to the fresh, stylish designs from competitors. Shoppers are drawn to the latest features, advanced interiors, and bold aesthetics that other brands now offer. Elon Musk's controversial public image has also hurt the brand, especially in progressive Europe, where consumers are increasingly sensitive to corporate values and leadership behavior. Headlines and social media debates have made Tesla a lightning rod for criticism. Many buyers now see Tesla as out of touch or even politically divisive, turning to brands that better align with their values and expectations. Meanwhile, Tesla's once unmatched technological edge has narrowed. Rivals now match its range, performance, and charging speeds, erasing the clear advantages Tesla once enjoyed. Without clear advantages in technology or design, Tesla is forced to compete on price and brand reputation, areas where it's increasingly losing ground to more innovative and customer-focused competitors. The company that once led the charge in innovation now risks being left behind. As customers flock to brands that offer more excitement and better value, brand perception is fragile, and Tesla's has taken a significant hit. Negative press and shifting public opinion are eroding the trust and enthusiasm that once fueled its meteoric rise. The storm Tesla faces is partly of its own making, and unless the company can recapture its innovative spirit and reconnect with consumers, its grip on the market will only continue to slip. Tesla's struggles reflect bigger shifts in Europe's car market. EV growth has slowed. Sales rose just 3% in October 2025, far below previous years. Early adopters have bought in, but mainstream buyers are hesitant. High interest rates and reduced government subsidies make EVs less attractive. Charging infrastructure concerns persist, especially for city dwellers. Meanwhile, hybrids are booming. Sales grew 7.5%, making them Europe's largest segment. Hybrids offer a practical bridge better efficiency without range anxiety. Tesla, with its pure electric focus, has nothing to offer hybrid buyers. Competitors like BYD and Volkswagen are thriving by selling hybrids and plug-in models. Tesla's all-or-nothing approach now looks like a strategic misstep. BYD's rise is no accident. It's a masterclass in strategy. BYD offers a broad lineup, from affordable EVs to popular plug-in hybrids, appealing to a wide range of buyers. When the EU imposed tariffs on Chinese EVs, BYD shifted focus to hybrids, dodging the worst impacts. Vertical integration gives BYD cost advantages. They build their own batteries and motors, keeping prices low. BYD partners with local dealerships, offering familiar service and support, unlike Tesla's direct sales model. This blend of innovation and local adaptation has won over European consumers. BYD's flexibility and scale let it outmaneuver rivals. The company's approach is both aggressive and smart, targeting gaps Tesla left open. BYD is now setting the pace in Europe's EV race. Tesla's narrow focus looks increasingly risky by comparison. Tesla isn't giving up. In fact, the company is doubling down on its efforts to win back the European market. It's planning refreshed Model 3 and Model Y launches in 2026, aiming to inject new excitement into its lineup and remind customers why Tesla was once the undisputed leader in electric vehicles. The hope is that these updates will reignite interest, attract new buyers, and slow the recent decline in sales. Tesla is betting that a fresh look and improved features will help it stand out in an increasingly crowded EV market, where competition is fiercer than ever. At the same time, Tesla is streamlining its Berlin Gigafactory to cut costs and boost efficiency, hoping to make its European operations leaner and more competitive. The company is investing in automation and new manufacturing techniques to stay ahead. But efficiency alone won't fix a stale lineup or a damaged brand image. Tesla knows it needs more than just cost-cutting to win back the hearts of European drivers, who now have more choices than ever before. The real test is whether Tesla can finally deliver a long-promised, affordable small car, the so-called Model 2. This vehicle has been rumored for years, and its arrival could be a true game-changer for the brand. Without a compact, budget-friendly model, Tesla misses out on a huge segment of the European market, where small cars dominate city streets and family driveways. European consumers are looking for practical, affordable EVs that fit their lifestyles. The company stands at a crossroads. Refreshes and cost cuts may not be enough to secure its future. Tesla must decide whether to play it safe or take bold risks to regain its former glory. To reclaim its crown, Tesla needs bold innovation, a broader product range, and a willingness to adapt to changing consumer demands. Only by pushing boundaries can it hope to lead again. The next year will be critical. It will decide if Tesla can stage a dramatic comeback or if its golden age in Europe is truly over. The stakes have never been higher for the electric car pioneer. The battle for Europe's EV future is just beginning, with new players entering the scene and established automakers stepping up their game. Tesla's next moves will determine its fate, and perhaps the future of electric mobility in Europe itself.